So is this just a case of Microsoft had gone so far up there that even with the positive earnings, there wasn't much room to move? Or are investors taking a worst case scenario look at cloud here somehow, maybe looking at the Azure number and wishing it were higher?
No, I think it's more the former. I think what you have going on is there's been a mounting fear in the tech sector and within software in the last few weeks, and I think everybody's fled into Microsoft as a sort of insurance, and I think that's what you're seeing this morning is there isn't in the short term an incremental buyer.
What should investors focus on when they're looking at Microsoft's growth areas? I mean, there's not just Azure, there's also Microsoft 365, there's Office growth. I wonder if investors are looking closely enough at all of the different service type revenues that Microsoft is getting and the strength in those.
Right. I think the way with these very large companies that have been in the market for a long time that have a very large existing revenue base, what investors want to see is that they can transition their business into this new cloud era. And so you look at Microsoft, they have a very large on-prem server business. That business actually grew quite nicely in the quarter. There's some factors that are driving that, maybe unusually high in terms of growth rate, but I think investors want to see somewhat of a growth handoff between the old business, the server business, and the new business, which is Azure. And so to some degree, I think those things need to be looked at together.
Walter, a lot of focus
as well as you
on...
have in Office similar other businesses where there's an old business and a new business.
Okay. Walter, there's a lot of focus right now on companies spending and tapping the brakes on
right.
capex and other types of investments looking into the future right now. Would Microsoft be immune to a slowdown?
I mean, I think ultimately they wouldn't be. The most recent work that we've done suggested that CIOs or chief information officers did acknowledge that the macro environment is getting worse. I would say in the last survey data, though, their budgets appear to be stable. So what we're seeing right now is a sign of stability after having actually gotten worse all throughout the first half of 2019. I think people will still be looking at what happens in 2020. You generally have new budgets set in 3 to 4 months from now. I think generally we see the companies that have very large amounts of large deal exposure signing multi-million-dollar deals as a large percentage of their revenue being more exposed. Microsoft is not in that camp, but ultimately nobody would be immune.
So the survey work that's being done across the street from Citi, obviously, looking at expectations for the next 3 years, you don't put too much weight in those.
Well, so I guess what we see is we focus very much on a last 12 months, next 12 months spending sort of index. What we've seen is stability from that perspective in terms of next 12 months spending growth looks a lot like last 12 months spending growth. Now, mind you, that versus where spending growth was a year ago has ticked down. So things have ticked down versus what we've seen in 2018. We haven't seen things in the last 1 to 2 months tick down further.